Hello my dear friends and welcome to StudyIQ. I am Joy and today in this lecture we will discuss about the improvements in the GST regime. GST is Goods and Services Tax and it provides a uniform tax code for all the indirect taxes in the country. Now let us understand what is the current affair. Recently, the GST Council has made many important modifications with regard to GST regime and its implementation. For example, in the 32nd GST Council meeting, we have already discussed about the 32nd GST Council meeting. So, in this meeting, the Council decided to increase the upper threshold for registration of business with GST. Earlier it was 20 lakh. Now it is increased to 40 lakh. Such type of changes are being made by the GST Council. And GST Council is the most important decision making body under the GST regime. So, certain decisions that were taken by the GST Council, they have a direct impact on the GST regime. So, we will discuss what are the improvements in GST regimes with the modifications made by the GST Council in the recent times. But before we move on, you can find the video of the 32nd GST Council meeting and the important decisions taken by the Council on StudyIQ channel. The video is named as 32nd GST Council meeting highlights. So please refer to the video for understanding the decisions taken by the 32nd GST Council meeting. Now coming to the recent modifications made to the GST. So as we have already said, GST Council is the highest decision making body under the GST regime, and GST Council has representation from both the central government as well as different state governments. So let us look at some of the recent modifications made by the Council. First one, many operational issues have been addressed by the Council. The GST Council is chaired by the Union Finance Minister, and various meetings of the GST Council have considered detailed inputs from the industry and they have provided workable solutions. So many operational issues have been addressed in the council meeting, and this was done through detailed discussion and considerations with the industries and also by considering the views and the concerns with the industries. And secondly, special drives were conducted in order to address the delays in refund of IGST, that is integrated GST, on exports and accumulated input tax credits due to inverted tax structure. Now coming to IGST. What is IGST? It is integrated GST or goods and services tax. So under GST there are three categories. One is CGST, that is central GST. Second is IGST, integrated GST, and the third one is SGST, state GST. So under the IGST, the taxes for the movement of goods and services from one state to another are collected. So this is based on interstate trade. That is the movement of goods and services from one state of the country to another state. So special drives were created or constituted in order to address the delays in refunds with regard to IGST on exports, and there were also delays or refund related issues with regard to input tax credit. So what is input tax credit? Input tax credit means when you pay the tax for the output, you can actually reduce the tax that you have paid on the input. For example, a manufacturer who produces a finished good, suppose he is purchasing inputs from 3 suppliers. So he need raw materials to produce the final product. But when he is purchasing inputs from the suppliers, he would be paying tax to the suppliers. So this is the input tax that he have paid. And for the output also tax has to be paid. So this will lead to multiplication or duplication of tax payments. So in order to avoid that, under the input tax credit, when you pay the output tax or when you pay taxes for your finished product, you can reduce the tax that you have paid on the input, and this will be refunded to the manufacturer. So this is the concept of input tax credit, and there were issues with regard to the refund of the input tax credit. So this was also solved by the GST Council by proposing solutions to address it. And recently in the 32nd GST Council meeting, we have seen that the Council has raised the threshold for registering under the GST. So Earlier, the threshold was 20 lakh. This means that those manufacturers or business entities who have an annual turnover of less than 20 lakh need not register with the GST regime. So, this has been increased to 40 lakh. Now, it means that those manufacturers or business entities who earn an annual turnover of less than 40 lakh need not register with GST. So, this will help the MSME sector to a larger extent. And also the council has decided to reduce the frequency of returns under the composition scheme. Now, what is meant by composition scheme? Composition scheme means one-time payment of the GST, or you have to pay the GST at a particular rate. So, under the composition scheme, the small taxpayers, they can get rid of the GST formalities and they can pay GST at a fixed rate of turnover. So, earlier, the composition scheme can be opted by any taxpayer whose turnover was less than 1 crore. Now, this 1 crore has also been enhanced to 1.5 crore. So, those traders or manufacturers or business entities who have a turnover of less than 1.5 crore can now opt for composition scheme, and also the frequency has been changed. That means earlier it has to be filed monthly. Now the returns can be filed on a quarterly basis. And also the GST Council has boosted the ease of doing business in the country, especially for the small manufacturers or small business entities. So such type of decisions like increasing the threshold or lowering the frequency, etc., will help the MSME sector or the small and medium entrepreneurs. And also we will see that in various GST Council meetings, the tax rates have been continuously reduced on many items. So, in the highest bracket or in the highest tax slab, there are only 30 items. And most of the consumption goods, they fall under the lower categories. And also, the recent decision of the GST Council to increase the threshold, this will cut the number of enterprises which are covered under the GST. So, the small and medium entrepreneurs, they have a wider or larger scope of doing business and ease of doing business. So, these are the recent modifications made by the GST Council. Now, coming to the key benefits of the GST modification, let us understand what are the benefits. But before going to the benefits, the fact is that adhering to GST means large-scale changes are required in the process, format of the invoice, tax accounting, coordination, etc. So, adhering to GST is not a simple task, especially for the small and medium entrepreneurs. Now, coming to the benefits, with all the modifications made by the GST Council, it has led to an ease in the refunds under the input tax credit. So, refunds have become more easy and also more efficient. So, this has made an improvement in the supply chain of the country. So, easy refund of the tax returns means that there is credit or finance available with the business entities. So, this will ensure the smooth running of the business. So, this has helped in the easy conduct of business. Now, the second one is that the GSTR 2 has been deferred. That means it has been further extended for a future date, and simplified new return filing model has been introduced. So, this has brought in efficiency. GSTR 2 would be more complicated. Now, instead of GSTR 2, a more simple and also easy return filing model has been brought. This has improved the efficiency. The third benefit is that major decisions of GST Council has impacted or helped in maintaining price stability. For example, elimination of cascading taxation, lower logistics cost. So, all this have stabilized the prices. That means inflation control. And also through the anti-profiteering provisions or the anti-profiteering clause, consumer protection has also been ensured. So, what is anti-profiteering clause? It means that the benefits of input tax credit or the reduction in the tax rates are finally passed on to the consumers. So, consumers should benefit from any reduction in the tax rates or return in the input tax credit. So, this benefit must pass on to the consumers. This is called anti-profiteering, and this has ensured consumer protection as well. And it has also created an efficient business environment with higher rates of transparency, lesser transaction cost, and better compliance. Now let us understand what more reforms are expected from the GST Council. So the GST laws that are now prevalent, they need further simplification because in India, a majority of the business entities fall under the category of micro, small and medium entrepreneurs. So in order to help them better, the laws must be further simplified and they must be consistent. And also, the GST Council must consider including petroleum products, alcohol, real estate, etc. also under the ambit of GST. So we have already seen that in the 32nd GST Council meeting, a high-level committee was constituted to study the case of including real estate also into the GST regime. So such type of products must also be included under the GST regime. And also, the number of tax slabs must be reduced to 3 slabs. One is the lower slab, second one is the standard slab, and the third one is the higher slab. Already GST Council is working on this proposal. So we can expect that in the near future, this will also come into practice. So the lower slab can contain certain items that are of necessary in character. The standard rates can be on items of mass consumption and a higher slab on demerit goods. For example, cigarettes. And we have already said that the GST Council and the government is working on all these plans and proposals. And if these proposals are implemented, this will benefit the businesses and also the consumers. And finally, this will strengthen the competitiveness of India. So, Indian market will become a competitive market in the global marketplace. You can find the PDF of this lecture on my Facebook page, and for any queries regarding your UPSC preparations, you can get in touch with me on my Facebook page or you can email me at joyce.studiiq@gmail.com. Thank you.